Securities and Exchange Commission custody rule change threatens crypto firms. The Securities and Exchange Commission is proposing a modification to the custody rule for investment advisors holding client assets that would reduce choices for advisors managing cryptocurrencies. The rule expands the requirements to all client assets, rather than just securities and funds. This would require all advisor-held assets to sit with a qualified custodian, generally a bank, trust company, broker-dealer, futures commission merchant, or some foreign financial institutions. During the open meeting on Wednesday, February 15th, crypto assets were specifically mentioned repeatedly as one of the asset types that were not explicitly and completely covered under the existing version of the rule, but would be included under this amended version. Securities and Exchange Commission Chair Gary Gensler also made it clear that he believes that, quote, most crypto assets are securities or funds covered under the current rule, end quote. The new version of the rule requires investment advisors to enter into a written agreement with qualified custodians for their client assets that will ensure that the custodian is living up to the expectations. In order for foreign financial institutions to qualify as a custodian, they will need to have implemented an anti-money laundering program compatible with United States regulations. The rule also makes changes related to record keeping for investment advisors and expands the examination options for qualified custodians. Commissioner Hester Pierce and Commissioner Mark Ueda both voiced concerns about the availability of qualified custodians for cryptocurrency assets. This is particularly relevant given recent communications from various regulators dissuading various entities from engaging in cryptocurrency custody. Pierce also worried about the 12-month timeframe for implementing this change, and that the Commission was using its regulatory authority over registered investment advisors to enact changes in the behaviour of custodians, who don't necessarily fall under Securities and Exchange Commission jurisdiction. The Commissioners voted 4-1 in favour of supporting this new rule, with Commissioner Pierce dissenting. There will now be a 60-day comment period where the public will be able to share their comments on these changes. The Commission has been taking a broad look at cryptocurrency recently, including sending a Wells notice to Paxos, alleging that Binance USD is an unregistered security. For more informed news, follow us on Twitter and Google News, or subscribe to our YouTube channel.